I was talking up to 28 classes. Once again, coming back on the 28th class, we were talking of operational mismanagement. And in the operational mismanagement, we were also looking at the operational mismanagement. We were also looking at some examples as to what constitute operation, what do not constitute operation, and similarly, what are mismanagement and what are not mismanagement. The clue you should all remember is, in order to constitute operation, 3 points you keep in mind. You would have read in my video classes. There are 3 points you also keep in mind is, if there is a violation of any of those 36 individual rights of the members given under the Companies Act, it will amount to oppression. Then the conduct must be harsh, burdensome, wrongful. Then it is oppression. Mens rea, your intention to commit the offense need not be proved. Then isolated act will not amount to oppression. It should be consecutive story. In other words, it's only by mistake they have not done. No, there's a very calculated attempt on the part of the company to do oppression. So keeping all these 3 points in mind, if you read the practical situation, you can easily find out whether it is oppression or mismanagement. Then in the examination, quite a lot of questions they are given as to what constitute oppression or what do not constitute oppression. So in the 29th class, I've started with lot of previous year questions, and I've explained the answers in each and every question as such, starting from question number 273 onwards to almost 289. So just to see, about 16 questions over a period of 20 years they are given on this topic as to whether it is an oppression or whether it is mismanagement. So go through each and every question, and you will find wherever illegality is involved, it is not oppression. See, for example, I have to take RBI approval. I have already applied. RBI has not given the approval. So how can I allot the shares? How can I send the dividends? Because I have to follow certain rules which are given in Foreign Exchange Management Act. In such cases, even though the members might have suffered, the members might have incurred losses, definitely it will not amount to oppression. It will not amount to oppression because I have to comply with the legal formalities and all that. So like that, very interesting situations I have explained. And one more very interesting situation is one of the case which I had given a number of times. That case law was both the Indian party as well as the French party, they had equal number of directors. But the French party was holding 60% shares, Indian party only 40% of shares. There was a fight. When all the 6 directors of Indian party, they were voting in favor. The French party 6 directors, they were voting against. So the Indian party went alleging that there is oppression. Then at that time CLB, they took a stand. Where is the question of oppression here? Now, when you are exercising your right, the French people are exercising their right. So it is nothing but a stalemate. It is nothing but a deadlock in management. So therefore the company law board took a stand. Deadlock in management will not amount to oppression. I repeat, deadlock in management is not an oppression. But having said that, still they said we'll try to find out a solution. Even though it's not oppression, they admitted the petition and gave a solution. And the solution was, they said, first, come on, who is holding majority shares? French people. Come on, you compulsorily purchase the balance 40% of the shares from the Indians and run the management. In case you are not in a position to purchase, the second offer will be given to Indians. You purchase 60% of the shares. If both are not interested, the only solution will be to reduce the capital. And even if this is not possible, winding up. So winding up will be a last resort. So like that, you find quite a lot of cases, and individually, when you read all those cases, very elaborate answers are prepared, almost 19 answers. And please understand, So operation mismanagement in the past is not operation mismanagement. That's another interesting point, because it should continue till the date of petition. Sometime back it happened, then what we were doing at that time? So many of the case laws said they are not oppression. And another thing is, invalid, illegal acts of the directors will not amount to oppression, because there are other methods under the Companies Act where you can just get alternate remedies. And similarly, you find losses incurred by the management is not oppression. You can throw out the director. There is a question of oppression. And also, non-declaration of dividend is never an oppression, because it is the prerogative of the directors. They may conserve the money. So one point you must understand, every pain of the shareholder is not the pain of the company. No doubt, shareholder is affected. If the company is affected, definitely shareholders are affected. That doesn't mean that every pain of the shareholder is the pain of the company. Therefore, the point here is, again coming back to the main issue, you must see whether any of the 36 rights of the member is violated by the company. Then only it will amount to oppression. So it's not that any time the shareholder has been inconvenienced by the company, it will amount to oppression. No. Then after that, in the 36th class, 29th class, which I'm discussing now, class action suits has been notified, section 245. The probability of getting questions in all these topics are very much there. Class action suits. This is a very interesting section inserted in the new Companies Act of 2013 and notified only recently, because earlier, how many people can apply? They were not notified. Now it's very clear. Now, what is this class action suits? Surprising. All of you know, an outsider can sue only the company, because the company has a legal entity, and in turn, the company will sue the members, company will sue the other, particularly members and others. An outsider cannot directly sue the director. An outsider cannot directly sue the member because of the legal entity concept. But surprisingly, in the class action suits, the members of the company, the deposit holders, how much we'll discuss that later, forget your legal entity. In case the company has indulged in fraud, mismanagement, and certain other things which have been specified, the specified members and deposit holders can directly sue the directors. Forget the legal entity. They can sue the company, they can sue the directors, they can sue the consultants, they can sue the auditors. Surprising. If the Satyam scam has come today, just imagine, LIC alone lost, I told you, 1,000 crores in that Satyam scam. LIC as a member of the company may directly file a suit against PwC, against that concern, the partners, the Gopal Krishnan and Srinivas, who was certified in a very wrong way. The annual report, the audit report, and all that, knowing that fraud has been committed. So class action suits directly can sue. So who can apply? Now, as per the latest regulation, they say 100 members or 5% of total members, whichever is less. So this calculation is different from oppression mismanagement, class action suits, in this 5%. I repeat again, in case company has the share capital, how many members can apply? 100 members or 5% of the total members, whichever is less, or members holding 5% of issued share capital. In case of unlisted company, again, they made a differentiation. In case of listed company, members holding 2% of the issued share capital, they can apply. Of course, in case of a company not having share capital, 1/5 of the members can apply. Then deposit holders also can apply for class action suits. He will definitely give the examination. How many deposit holders? 100 deposit holders. That's enough. These are all the sections to protect the minority interest. 100 deposit holders or 5% of number of depositors, whichever is less. So don't set that figure 100 in your mind. 100 or 5%, whichever is less. And where the company or the deposit holders who have given total 5% of their deposits in terms of value, they can file the suit. So these people can file the suit. And what is the allegation? They are operating oppressive to members, prejudicial to public interest, prejudicial to the interest of the company, and whom they can sue. Very interesting. They can sue the company, they can sue the directors, they can sue the auditor and the audit firm, they can sue any expert, advisor, consultant. See, the secretarial auditor they can sue, internal auditor they can sue, any specified professional consultants if they are given wrong advice. As a result, the member or deposit holder has incurred loss, you can sue them. So it is a new area which we have copied from Western countries and opened up. So auditor has to tighten the belt. He has to be very careful. And what kind of you can sue, and what kind of, for what compensation as well as damages for the losses which you have incurred. And one more thing, not only compensation and losses, you can also sue for other things. If the company has acted ultra-virus beyond the scope of articles, you can, the tribunal will give an order to the company, stop that ultra-virus act. See, indirectly, minority shareholders controlling the board of directors in indulging wrongful acts. Very interesting. We all read that management of the company is in the hands of majority directors, majority shareholders, but still minority shareholders can, through tribunal, stop the wrongful acts of the board of directors of the company. Similarly, if they are committing breach of provisions of the memorandum articles, the tribunal will order them to stop it. And similarly, they have got some resolutions passed in the general meeting without disclosing the material facts, then the tribunal can nullify those resolutions, then restrain the company and the directors from acting on such resolution. And also, if you have passed any resolution contrary to law, the tribunal may stop those resolutions. So it's a very interesting section which I've explained in detail. And of course, class action suits will not be disposed of in a very easy manner. The tribunal, because of the extraordinary right in the hands of the minority shareholders, tribunal will consider various factors. Anything can be given in examination. For example, tribunal will say whether the member is acting in good faith and all, or whether competitor is influencing him. So that he would look into. Because then, is there any alternate course of action available for the members? This remedy should be a last resort. Then, is there any chance that the board of directors may rectify? So all those factors also are given. And the penalty for violating the tribunal's orders is terrible. The company will be punished with fine not less than 5 lakhs, which may go up to 25 lakhs, and every option default, imprisonment 3 years, non-computable offense, and fine not less than 25,000, which may extend to 1 lakh. So not many questions were given. Only one question was so far given, and there is a possibility in the class action suit you may get more questions. So this is what I've covered in 29th class as such. In the 30th class, we will now move to compromise arrangement and amalgamations. This I've started in the 30th class. I've given elaborate explanations. If you hear it, if you go through, you will independently understand this. See, compromise and arrangement is not a matter of routine. Winding up is not a solution. Every time that the business is not doing well, winding up is not a solution. If you wind up, there is who is going to purchase your plant and machinery, land, and all that. See, it's like the disease is worse than the remedy is worse than disease. So therefore, every time when the industry is not doing well, winding up is not a solution. So what do? We wait for the revival of the industry. For the revival, then you require, when the industry has revived, you require working capital and all. For that, some sacrifices has to be made by the shareholders, debenture holders, deposit holders, creditors, and all. So this is all compromise and arrangement. In your accounts, compromise arrangement is nothing but internal reconstruction. So no new company comes into existence. So the idea is to eliminate the losses from the balance sheet, requesting the shareholders to cooperate so that the board of directors are telling, now the industry has revived. I see a ray of hope at the end of the tunnel. So now, if you make a little bit of sacrifice now, then definitely we'll run the business on profitable lines. This is the idea behind compromise arrangement. I spent a lot of time trying to explain in my class why the need for compromise and arrangement. We started the business, industry is not doing well, we are incurring losses, winding up is not a solution. So I want people to cooperate. If I want further working capital, I need to eliminate the losses from the balance sheet. So with this losses balance sheet, I cannot get any additional working capital. So in compromise arrangement, which is nothing but an internal reconstruction, no new company come into existence. So I am requesting the existing shareholders, preferred shareholders, equity holders, the creditors, debenture holders, banks to sacrifice certain things so that what the benefit I get, I will use. It's a capital reduction process, and I will try to eliminate the losses from the balance sheet, unprovided depreciation, then miscellaneous expenditure not written off. All that I do in accounts is nothing but internal reconstruction. Then procedure for compromise arrangement I have given elaborately. In the examination question, depending on the marks, you have to write briefly the procedure. So in my answers, I have given it quite briefly. So that much if you write, that is enough. But in the material, I have elaborated the procedure because any one or two items you can give in the examination as such. In other words, the meeting itself will be conducted by the tribunal under the control of tribunal. Then tribunal has to give the approval. The advantage in this compromise arrangement is once the tribunal sanctions the compromise arrangement for the revival, no other person can go to court or again to tribunal and disturb the compromise arrangement proposal. So all that I've explained, and in that how many people can approve, a lot of questions are given in the examination. So we have done a lot of calculation. Please go through all that. This is what I've covered. Then after compromise arrangement, we are moved into amalgamations and mergers. In the amalgamation mergers, the same game plan is done in the new company. The new company may be you start a completely new company or one of the existing company. In other words, the assets and liabilities of the old company is taken over by the new company. Again, I repeat, the new company may be completely new company or it may be one of the existing company. We call it takeovers. So takeovers are done for various reasons, which I've explained. One of the main reasons is to synergies of operations. That particular company manufacturing facility is quite good, whereas in the new company, marketing facilities are good. So you synergize the operation and also you try to kill the competition to establish the brand name. Like that, there are various reasons why you go for amalgamation, merger, reconstruction, all that. So the procedure is the same. I've explained all that. Compromise arrangement procedure with the approval of tribunal, the same procedure will apply to mergers, amalgamation, takeovers, and the only difference you find is both the companies have to follow the procedure. So I have very elaborately explained all that, keeping the special points in mind. And there is one very important case law, Hindustan Liver case. I don't know what is so important in that. 3 points they are clarified, and that case law 7-8 times he had given the examination. Even recently also given the examination. What are those 3 points? I have very clearly explained the Hindustan Liver case in the amalgamation and reconstruction. And the previous year questions I have discussed. This is where I have finished this class number 30. What is the need for compromise arrangement? What is the need for merger, amalgamation, and reconstruction? So we spent about almost 2 hours in that topic, and we had gone through in that. Please go through that very carefully. Then 31st class, I've started with some of the previous year questions with that. Then I went to amalgamation reconstruction under 233 fast track route. It's nothing but the procedure in 232 is very elaborate. You have to go to tribunal, take their approval. It is timely, it is time consuming, it is costly and all that. So what the government did, in case of amalgamation between holding and wholly owned subsidiaries, amalgamation in case of two or more small companies. Already we discussed what is a small company, where the paid up capital does not exceed 50 lakhs, turnover does not exceed 2 crores. These are, and they are all private companies. So amalgamation between two small private companies, we don't have to go to tribunal. A shortcut procedure is adopted. Only thing, you send a notice to registrar of companies or the companies in liquidation OL, and they will also have a say on that. And this method you can go only when the solvency is established. In other words, we cannot ask the creditors to sacrifice. Okay, solvency should be there. Then the approval should be done by a different majority. All that I've explained. The fast track route. One main issue in the fast track is tribunal's approvals has been dispensed with. Then amalgamation or reconstruction with foreign companies, section 234. Whereas in compromise arrangement, there's only one procedure. Amalgamation and reconstruction, you have got almost 6-7 sections with different procedure. All that I've explained. So the third procedure is, when there's a merger or amalgamation between Indian company and foreign company, or foreign company and Indian company, what are those extra points you have to keep in mind? There's nothing but RBI approval will be required, and purchase consideration can also be given in the form of depository receipts, and all these are 1 or 2 points. But valuation has to be done by registered valuer. All that I've explained. Then we moved on to a very important merger or amalgamation procedure, 235. This is popularly known as takeover. In the previous method, we tried to acquire the assets and liabilities. In this method, it's totally different. I've taken about half an hour to explain all that. You read that very carefully. You listen to my lectures very carefully. In mergers amalgamation under section 235, we don't disturb the assets and liabilities. We just purchase the whole shares in the open market and try to make a 100% subsidy. And once you become a 100% subsidy, come on, minority interest is not involved. So no more meetings of the members, no more tribunal approval and all. So directly, just through a book entry, you can take over all the assets and liabilities. So this is 235 special procedure, which I have explained. But then acquiring 100% of the shares is not possible. So the 235 special procedure says, for any reason, if you have acquired 90% of the shares, follow the special procedure of principles of natural justice under 235, then it will enable you to purchase all the balanced shares. So that procedure also number of times he had given the examination, which I have elaborately explained. Then next was a new section which was introduced in the Companies Act of 235. In case you failed under 235 method, 236 purchase of minority shareholder. I have elaborately explained the difference between 235 and 236. Then afterwards, we went into powers of the government to order amalgamation in the public interest, 237. So central government has been given enormous powers. Only one sentence you have to satisfy. Where the central government is of the opinion, it is in the public interest, that's all. Central government need not have to specify reasons. In NTC Limited, 32 companies have been amalgamated because the handloom farmers and all that, they have been suffering very badly, handloom weavers. Because power looms have become now very competitive, and the selling price of cloth of power loom is almost 60% of the cost, raw material cost for handloom. How handloom weavers will survive? So what the government did to provide some kind of survival mechanism and cost-effective measures, they said all the handloom weavers, some companies, 35 companies, if I remember correctly, the government issued in NTC Limited, they amalgamated in the public interest. So what about the name of the company? What about the rights and liabilities? everything the government will decide in the amalgamation document. If anyone is agreed, you can go to tribunal. So once the tribunal decides the case, then finally the government will give the order of amalgamation reconstruction under 237, which I have explained. So in class number 31, I finished off all this mergers, amalgamation, compromise, arrangement, takeovers. And usually in the examination, we get one question in this topic of amalgamation reconstruction. I've explained all that. Starting from inspection, investigation, one question. Then operation mismanagement, you get one question, including class suits, all that. Then compromise, arrangement, reconstruction, usually one question you get. This is how the paper setter will spread over. So what I'm trying to tell is, if you go for selective preparation, you'll be doomed. This is the secret. I've been repeating this again and again. So entire syllabus you have to cover. So forget choice. From first page to last page, you have to read. That is the key for success. Then in the miscellaneous chapters, one by one, we have started in 32nd class into the Companies Act. First, we have discussed what is this tribunal, National Company Law Tribunal, NCLT, and National Company Law Appellate Tribunal. Now, what they have done in the notification which they gave about 1 year back, C Institute said, since the NCLT and NCALT has already been constituted, some of these sections regarding constitutions, they have removed from the syllabus. It is there in the Act, but they have removed in the syllabus. Therefore, not much points are there in NCLT. Only thing is, if you are not happy with the order of the tribunal, how to go to NCLT? That has been retained in section 421 and 422. And then, if you are still not happy with the order of the appellate tribunal, you have to go to Supreme Court. So that appeal provisions only has been retained. So that after that, then what are the special procedures which you follow? Please understand this NCLT, NCALT and all, they are quasi-judicial bodies. So the regular court procedures will not apply. The civil procedure code, criminal procedure code will not apply. So shortcut procedures can be made by them. So the criteria in creating these quasi-judicial bodies is speed is the criteria. Without sacrificing justice, these cases will be disposed of in a speedy manner. That is why the NCLT and NCALT has been created. Then the next topic, small topic, is companies incorporated outside India, foreign companies. Foreign companies which have got a branch in India, they are also controlled under the Indian Companies Act. I don't know. I was going through the previous papers. In the last 20 sessions, that is for 20 years, 40 sessions, believe it or not, 32 questions are given in this foreign companies. Simple psychology. Students will, by the time he comes to all these miscellaneous topics, his energy is exhausted. He doesn't try to read. So the paper setter will encash on this psychology. So he gives a lot of questions. Not very elaborate questions, simple questions. So go through all this very carefully. So now the definition of foreign company has changed quite elaborately. You read at your interlevel. Once again, it has been repeated. The main point you have to emphasize is you can have the branch of the foreign company in India either physically or through electronic mode or directly or through agent. And they have defined what is this electronic mode: business to business transaction, financial settlement, database services, web-based marketing, online services. In other words, if a foreign company tries to sell a product to an Indian online, it comes under the definition of foreign company. They have to register in India, or register in the sense, file a lot of returns with the Register of Companies at New Delhi. So because of the change in the definition of foreign company now, thousands and thousands of foreign companies, which they do indirect or direct business in India, they will come under the definition of foreign company, and quite a lot of returns as specified in this section 379, you have to file with the ROC. So I have explained all those things, and we went to the previous questions, whether it's a foreign company, whether it is not a foreign company, all that we discussed. Then once you commented the definition, what are the various documents which you are to file with the ROC Delhi? Previously, you can file ROC Delhi plus the regional, the place in India. Now that has been removed. Now that online filing has come, all foreign companies are controlled only by Delhi, New Delhi, ROC Delhi only you have to file. Then all changes also, whichever happen in the parent company, those changes also has to be filed. Then the foreign companies' annual accounts in India, you have to file along with the consolidated statement. They have to be audited. So along with the balance sheet, P&L account and all, some extra documents you have to file, like statement of related party transaction, statement of repatriation of profits, statement of transfer of funds. All this please go through. They are all a bit boring. I've been repeating this. Whether boring or interesting, students have no choice. You have to go through all that very carefully. Then small sections here given display of name of foreign company. You read at your inter level, any Indian company, place of business in the office or branch or go down everywhere, the name of the company should be written, registered office address, branch office address, all that has to be painted or affixed in a conspicuous position. Now, in case of foreign company, apart from the name, registered office and all that, you have to also write the name of the country in which it is incorporated. Write the name in English and say incorporated under the Companies Act in Germany, in US, like that you have to write, plus the other Indian address details, and also this registered office, the name of the country where it is incorporated, you have to write in name boards, letterheads, bill heads, invoices, and all the documents. Then what are the provisions of the Companies Act which will apply to foreign companies? Not all the sections will apply because board is not constituted in India, members are not there in India, therefore almost 90% of the provisions will not apply. So what are the sections which will apply? You have given number of times in the exam. If you have borrowed money in India through issue of debentures, those provisions, then filing of annual returns, financial statements, all that will apply. Registration of charges. If you have borrowed money from bank financial institution in India through mortgage, the charge has to be registered with ROC. Then provisions regarding maintenance of books of accounts, then inspection of the books, corporate social responsibility, all for the profits which you have earned in India, you have to spend the money. So all those sections will apply even to foreign company which you have given. And in case you have mobilized any money in India, if the foreign company has mobilized any kind of money in India by issue of shares, prospectus is compulsory. And the prospectus should contain more additional details. So you find section 387 to 389. What are all the additional details which you are to give in the prospectus of a foreign company in case they are mobilizing money in India? Then any document which you file with ROC has to be authenticated. It has to be translated into English. If it is not in English, then who will do the translation? All those points I've explained. And any provision, if you violate in this foreign company, they are punishable with fine. Any provision not less than 1 lakh, which can go up to 3 lakhs in case of company, and continuing offense for officers 50,000 per day. All those things have been given. And this penalty has given 4 or 5 times. I don't know. Specifically, if foreign companies violate the provisions of Indian Companies Act, what is the penalty they have exposed themselves? That has been frequently given in the examination. Then the miscellaneous chapter, then I have covered in that topic special codes. So please understand, company law tribunal, their functions are different. They are quasi-judicial bodies. They have to give certain approvals specified in the Companies Act. But then criminal cases will be filed against the company and directors only in the court of law. Then criminal cases, CRPC will apply, Criminal Procedure Code. In the regular courts, the cases will be filed against them for any criminal activities of the directors in terms of violation of Companies Act. Now, what is happening? Criminal courts are already bothered with thousands of cases under various legislations. So, what the government has decided, they are constituted special courts. What is the difference between regular court and special court? Special courts will deal only with cases connected to the Companies Act violation. So speed is the criteria. So in section 435 to 438, they have explained how to constitute the special court, what various types of special courts, the subordinate courts and all, and what cases will be referred, and it will all be constituted by single judge. What is the status of that single judge? In case it's a sessions judge, additional sessions judge, that status they'll be constituted. Then what kind of cases will be taken up? What is their jurisdiction? All that I've explained. Applicability of the Criminal Procedure Code, all that. Then another small topic. We are finished in class 32. Cognizable, non-cognizable has two different meanings. One is cognizable offenses. Cognizable offense is an offense where the police officer can arrest a person without arrest warrant issued by the magistrate. That's called cognizable offense. Cognizable offense. So under the Companies Act, you find only in investigation done by SIO, which I explained in the last class, that is the SIFO, SIFO, that office, if they do investigation, they can only arrest any person, Serious Fraud Investigation Office, SIFO, they can only arrest a person without arrest warrant. Otherwise, all the offenses in the Companies Act are non-cognizable. So if anyone wants to arrest a person, he has to take an approval from the judicial magistrate or executive magistrate. Then another meaning of cognizable is who can file the case in the tribunal or in the court. Usually, in any case, the affected person, the members of the company can file. Then any other person authorized registrar of companies can file, because he is the custodian on behalf of the public. Then Central Government Department of Corporate Affairs, New Delhi, they can file. And the other one, SEBI is also authorized to file in case of listed companies in the matters to issue and transfer of security cognizable. 2-3 questions he gave the examination. Up to here, that is what I have covered in class number 32. Now in class number 33, I have started with mediation conciliation panel. 33, I have started with the mediation conciliation panel. These are all new topics which are included in the Companies Act 2013, and frequency of questions in the examination will be more. What is this idea behind mediation conciliation panel? Once I finish arbitration, you will understand much better. So now, just to be brief, now many cases, the people fight and go to court. But the courts have found out in many cases, many issues, the parties to dispute can settle across the table, discuss the pros and cons, and come to settlement. This is the idea behind arbitration. The person who does the settlement is called arbitrator. So like that, mediation, conciliation. So in a particular, when the case is filed before the court of law, either the central government or the court itself may, with the consent of both the parties, refer the matter to mediation conciliation panel and for their recommendation. So this will reduce the job of the court. So we have discussed what kind of people can become mediators or conciliators, what are the qualification, disqualification, and what matters cannot go to mediation, which cannot be settled by them, What is the procedure to be adopted by the mediators, conciliators? That's the area of discussion. So that you have to go through. Then powers of the government to appoint prosecutors, because a lot of cases are filed by the government. So just like when the government files the case, they have public prosecutors. So the public prosecutors like that will be appointed in the Companies Act, who will take up all the cases on behalf of the government. So that 443, 444, those sections are covered. Then comes various punishments are given, penalties, fines and all. They have added a new section 446A, which says what are the factors the court or special court will take into account while determining the fine or imprisonment. Because if you look at the sections, what the section says is punishable fine not less than 50,000, which can go up to 5 lakhs, or imprisonment not less than 3 months, which can go up to 2 years. So ranges are given for fine as well as imprisonment. So you are a judge. So when you are a judge, on what basis you will give the fine or imprisonment? When you will give the fine of just 50,000, what factors you will take into account when you want to give a maximum fine of 3 lakhs, something like that. So all these points they have got. So now they have, in order to standardize and rationalize, the law itself says judges have to keep these factors in mind. That is the idea in 446A. For example, while giving the quantum of punishment, keep in mind size of the company. Smaller companies where public interest is not involved, probably lower fines can be given. That's the idea behind size of company. Nature of business carried on. If it is in infrastructure areas and all, punishment will be terrible. Then injury to public interest. If it's a private company, we can think of smaller punishment. Public money is involved, public interest is involved, you are a listed company, there's a responsibility on your part to comply with law, then we can consider serious punishment. The nature of default, repetitive nature of default. First time, second time, I can consider lower fines. You constantly try to default, will go for higher fines. Then lesser penalties in case of smaller companies, particularly one-person company and small company. If only for 3 sections, you are not filed the annual accounts or financial statements, you are defaulted in filing the annual returns, or you are not filed that MGT 14. In those 3 cases, the penalty will be half compared to the original penalty, which is levied to the other companies. Then penalty for repeated defaults, one more section they have added, 454A, in which they are saying that same type of offense if you are committed by the company and the officer, again within a period of 3 years, the penalty will be double which is imposed. So these are new sections which I had given in the examination. Then this is what I have covered in this class number 33. Then in class number 34, I have started with other miscellaneous areas. First one, strike off of name of the company. This is a very important area. A lot of questions are concentrated. This is called defunct company or strike off of name. Shortcut method for winding up of the company. Very popular with the registrar of companies. So strike off of companies covered under section 248 is of 2 types. One is voluntarily the company itself is not doing business, or under some circumstances, they themselves go to ROC, they themselves go to tribunal and want the name to be struck off. That is covered under section 248(2). In 248(1), strike off by the ROC. ROC also in certain cases, like for example, he comes to know you have just started the company and you are not doing any business for 2 financial years, or you are not obtained that certificate of commencement of business, or you are not started business as revealed by physical verification. In those circumstances, or you are not started business for 1 year of incorporation, ROC himself will take the initiative to strike off the name. So two types of strike-off in terms of procedure I've discussed, starting with class number 34. Then certain common points which will apply to both type of strike-off we have discussed. Then certain people cannot make an application under section 248. For example, if they change the name, change of registered office, or disposed of the property and all that, or they are wound up under IBC, insolvency bankruptcy code, they can't make an application. And if you make a fraudulent application with the intent to cheat and all, terrible punishments are there, appeal to tribunal, all that we have discussed. And certain companies cannot file any application for the removal of name. Like, for example, under this whole section, strike-off, they cannot apply. For example, listed companies, because listed companies, public interest is involved. On the basis of certain recommendation of board of directors, when they strike. So then companies where prosecutions are pending in the court, companies which are defaulting companies, vanishing companies. What is a vanishing company? They have defined. So all that is covered, and a lot of previous questions they have been given. Please go through that very carefully. Then small topic I have covered is government companies. So what is the definition of the government company, and what are some special provisions of the government company, and how the auditors are appointed by the government company, and the annual reports has to be given to the government based on the quantum of shareholding. All that I have covered. They are not given regular questions in the examination on that. Then you will find most of the sections, they say you'll be punished with fraud under 447. So what is that 447? I've explained. So fraud means, if it's a serious fraud, that is the amount involved in the fraud is 10 lakh rupees or 1% of turnover, then the punishment is not less than 6 months to 10 years. This is the new provision, the Companies Act, fraud. Even for misstatement in prospectus, you are such a serious offense, you have looted public money, the imprisonment is only 2 to 3 years. But here, come on, here, bigger frauds, he can be put inside for 10 years. So government has tightened the provisions of the Companies Act. Then minimum, sometimes instead of 6 months, if it involves public interest fraud, then the imprisonment shall be not less than 3 years. Then it's smaller frauds and all that, they can go up to any person punished with imprisonment up to 5 years, and fine which may extend to 50 lakhs. So then what is fraud, what is wrongful gain, what is wrongful loss, all those are given. Then one more penalty they are provided in section 450, punishment where no specific penalty is provided. This is the height. Companies Act says in a particular section, I have forgotten to give the penalty, or I have not specified the penalty, general penalty will apply, which is given in section 450. For example, holding the board meetings. If you don't hold the board meetings, what happens? Apart from the other consequences, he says that the company and every officer in default will be punished with 10,000 rupees, and then it's a continuing contravention, further fine 1,000 rupees per day. So this is what I've covered in class number 34. Then the last one is class number 35. First, I've explained what is a dormant company. We read in the very first class as well as the inter classes. Now you have got a new set of companies called dormant companies, and I've explained in one of the classes what is a dormant company. It's not just inactive company, it's the transactions which are not there on regular basis. So I go through all the definition of dormant company and how you have to apply to the registrar of companies to get the status of a dormant company. Just like that, they won't give you dormant company status. You have to apply. So when you apply, then how to file an application converting back dormant company status to active company, all that I've given. So regarding dormant company, there was a discussion. Then public interest, one topic I've added. See, if you carefully read the present Companies Act, at various sections, the very wonderful term public interest has come. Am I running the business in the interest of members or interest of workers or in the interest of shareholders or in the interest of the company? Where is public interest coming to picture? Oh, government is very clear. You have got taken public money and lot of social responsibilities are there. So in various sections, the word public interest is used. I have segregated and brought out all those sections and I have explained very clearly where public interest is involved. So once, twice I had given the example. Then I have spent a lot of time registered valuer. A separate chapter has been included in the Companies Act on valuation, registered valuer. See, today you have got intellectual property rights. You have got patent, trademark, copyright, software, brands, marketing rights. Today, the big issue before us is valuation. Much of the frauds are taking place in valuation. Very simple example. Here is a director who says that I am starting a software company and I have developed a software myself and he's selling the software for 1 crore to the company. Now the issue, who has valued this as 1 crore? If it is tangible asset, the basis of valuation is very simple. If land is to be valued, plant and machinery is valued, if a manufacturing cost and all, you can work it out. But intangible property valuation is a big issue today. So much, for example, a software, you may say its value is 1 crore, you may say the value is 10 crores. I've explained with example all that. So now there's a separate course which has started for professionals. They can register as valuers after you qualify that course. So valuation provisions, the rules, who will be called valuation professional, who are, just like CA Institute, they have started valuation institute also there. Go through all that, then how to register as valuation professional, how to start the firm of valuation professionals, cancellation of valuation. So at present in the Companies Act, what are the areas in valuation where valuation report is compulsory? When you go for further issue, rights issue, valuation of shares is compulsory. Then in corporate debt restructuring framework, then compromised arrangement valuation report is required under section 220, like that. Then value minority shareholders and under 236 valuation report is required. Lot of areas. Penalty for contravention. Then at the fag end of the class, I started with winding up of companies. I've just started with explaining what is the meaning of these words. What is the meaning of liquidation? What is the meaning of winding up? What is the meaning of dissolution? Because most of the students try to use the 3 words almost like interchangeable words. Then what is the difference between winding up and dissolution? I've explained all that. Then there are 2 modes of winding up. One is the compulsory winding up under the Companies Act. Voluntary winding up under the Companies Act has been shifted to IBC. So we are not reading the provisions of voluntary winding up under the Companies Act. It is not there. Voluntary winding up is now taken care by Insolvency Bankruptcy Code. So what are the circumstances where the company may be wound up? So don't read the old books or old act and all. Completely new circumstances have come. In the absence of case laws, you have to go through and visualize certain situations. Then, so like for example, if they have acted against the sovereignty, integrity of India, security of the state, or you connect those investigation, those things have been done, and you have started the company for fraudulent, unlawful purpose, you can be wound up like that. And ROC has made and you have made a default in filing the financial statements and annual returns for 5 years, they can initiate compulsory winding up. For 3 years, if you don't file, come on, directors will vacate the office, disqualification. Then just and equitable grounds, they can wind up. Then what is just and equitable grounds? But winding up should be a last resort, all that I've explained. Then who can file the case for winding up? Who can file the case? Company can file the case, contributory can file the case, government can file the case, ROC can file the case. So in class number 35, I've discussed up to when company can file the case, who is a contributory and when the contributory can file the case. Up to here, I've discussed these 7 chapters, 7 classes. Please go through very elaborately. I now request Srinija to take over the questions, if any, from the students, which I'll be glad to answer. Srinija, please.
Yes, sir. Am I audible, sir?
Am
I audible, sir?
You have to increase the volume. Hello?
Yes, sir. So if anyone have any doubts or questions, please.
Pardon? You have to increase the volume, madam. Hello?
Sir, I think she has an issue with her audio.
This audio seems to be better. Yeah.
Yes, sir. If anybody has doubts, they can ask sir now.
Right. Anyone can ask doubts. Yes. I've been telling this again and again. See, I'm very disappointed in the sense that no student has given any email to me, or they have given any, I have given my cell number also. No one has sent any WhatsApp expressing doubts and all that. So it could be 2 reasons. One, they have not understood anything, or they have understood everything. I believe it is the latter one. So you can use this opportunity, or you can ask the doubt here, or you can write to CAPS, and those people can forward the questions to me. So I've got some few minutes to take up the doubts. Any student can switch on and ask me doubt.
Sir, I have a doubt in donation to political parties. When there is no limit on the amount payable as donation, why are there so many indirect donation provisions, sir?
See, madam, this indirectly, directly or indirectly, those provisions were there when the limits were there. Beautiful question. But then what happened? They made an amendment removing the limit, but they forgot to use the word indirectly and all that. Since the department clarifications are there, we cannot remove it. I've just included. In other words, no, but procedures has to be followed, isn't it? So the emphasis is on procedure. So if it is indirect donations also, forget the limit, but the procedure, the matter has to go to the meeting of the board. Then resolution itself is justification in law. Then you are to give in the annual report. So those procedures you have to follow. To that extent only, the word indirect donations is relevant. Yeah.
Yes, sir. Thank you, sir.
So any other student before I end up?
Any changes in old syllabus, new syllabus?
Old syllabus?
And new syllabus, any major changes?
No difference in old syllabus, new syllabus. So in the old syllabus, separately I'll be giving, you contact CAPS people or you contact me, separate classes I'll give for dividends, audit and accounts, and this interpretation of statutes and the Competition Act. Like that in the old syllabus, those extra this is there. Go through those videos in the old syllabus.
Okay, thank you.
And also the material also, if you contact me or CAPS, I can send you the old syllabus, that extra chapter material. Otherwise, whatever material I have given for new syllabus, you follow. Only thing that Foreign Contribution Regulation Act and the arbitration is not there in the old syllabus. That's all. Okay. But otherwise, all this Companies Act, you have to read in the old syllabus as well as new syllabus.
Okay.
So thank you very much. Thank you one and all. We'll meet again next Sunday from class number 36 onwards up to class number 42. Thank you one and all. God bless you. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you.